This is Sam Bankman Fried.
I thought there was a 20% chance that we would ever succeed.
He got into trading Bitcoin in 2017 as it was gaining popularity.
Bitcoin.
No banks, no fees, no inflation.
Over 1,000 cryptocurrency exchanges available worldwide.
Jordan Belfort calls Bitcoin a fraud.
He discovered that the price of Bitcoin on US exchanges varied by as much as 10 times from that on Japanese platforms. He could make nearly a risk-free 10% profit overnight by purchasing Bitcoin in the US for $10,000 and then transferring them to the Japanese exchange market, where they would be sold for $11,000. Because of this, Sam resigned from his job and launched Alameda Research, a cryptocurrency arbitrage trading firm.
The sort of founding of it was basically, Bitcoin was trading on a lot of different crypto exchanges, and it was not trading at the same price on all of them.
These arbitrage deals helped him to earn $20 million in a matter of weeks. Quick returns like these convinced Sam that cryptocurrency had great potential, even though the price differences gradually evaporated as other traders began copying Alameda's strategy. A few years later, he was crowned a messiah of crypto worth $26 billion within 4 years from his crypto platform FTX, and his story was like an example of rags to riches, and vice versa within a week of collapse of his empire that was built on lies.
New chaos in the world of cryptocurrency.
The one-time darling of the crypto world has been arrested. Sam Bankman Fried.
He is under house arrest after his extradition to the U.S. last week.
I think she'll go to jail.
FTX shocked investors by declaring bankruptcy this week.
But how did a once golden boy get accused of perpetrating a multi-billion-dollar fraud on his investors, using customer funds to purchase properties, fund political donations, and backstop trades at his hedge fund Alameda Research? The fall of the 30-year-old crypto king was as rapid as his rise. Looking back, Sam was born in Stanford, California on March 6, 1992. Sam's parents were both law professors at Stanford, so I think it's safe to say he had a good upbringing. He spent a lot of his free time reading Harry Potter and watching the San Francisco Giants play. He went to a small private school in the Bay Area before getting into MIT, where he studied physics as his major. Sam was taking physics at MIT, which is one of the hardest majors, if not the toughest. So you might think that college was all he did, but Sam says he was able to get through it partially. It seems that instead of studying, he spent much of his time playing video games like StarCraft and League of Legends. So it looks like we're looking at a child genius. Sam's first goal in life was to follow in his parents' footsteps and become a professor of physics, but he eventually deviated from that path when he developed a keen interest in moral philosophy. Sam's primary focus was on effective altruism. Sam thinks that rather than helping to activities that are currently in trend, one should contribute to those that will, in all honesty, have the most impact. For instance, causes that accomplish the greatest return on investment in terms of lives saved. However, Sam recognized that he would need significant financial resources if he was to have such an impact, and that a career in academia was not going to provide them. Instead of continuing his education to a higher degree, Sam accepted a high-paying position in finance with a quantitative firm called Jane Street Capital. After starting trading while still working at Jane Street, it was just him and a couple of new college graduate friends at the beginning. But despite being inexperienced, they were able to quickly acquire a substantial amount of capital. Sam, with his prior knowledge on Wall Street, positioned himself as the go-to expert for crypto trading. Neither the decentralized aspect of Bitcoin nor its potential as a hedge against inflation caught his curiosity. However, it was Bitcoin's inefficient marketplaces that attracted his curiosity. Sam was trading $25 million worth of Bitcoin each day by January of 2018. But it was at the height of the Bitcoin bull run that things quickly declined from there. Sam wasn't concerned about the gradual collapse though, since he saw a much bigger opportunity ahead. While trading millions of dollars each day, he realized that the market's current crypto brokerages were unreliable. The popular crypto brokerages like Coinbase had spent all of their effort on making crypto purchase as seamless as possible for individual investors. While they excelled at this, they struggled to keep up with the rapid pace of traders' transactions. As a result, Sam made up his mind to launch his very own cryptocurrency trading firm. In 2019, after launching the Hong Kong-based cryptocurrency exchange FTX, Sam served as a CEO of FTX, FTX US, and Alameda Research. However, he apparently only served in the latter two roles and put his alleged romantic girlfriend, Caroline Ellison, to the position of CEO of Alameda Research. Stay tuned. I'm working on a comprehensive video project centered on Caroline Ellison. Alameda's research was reportedly separate from FTX's, and Alameda's business plan was based on trading cryptocurrencies, whereas FTX's was based on charging fees on customers' crypto payments. There's no logic why these two businesses should be partnering up, but for some reason they seem to be joined together behind by delusional romance. They don't realize that combining relationships and business ties will lead to disappointment. A big selling point for FTX was that it was developed by traders specifically for traders. They stood out by allowing skilled traders to take substantial risks with a wide variety of crypto derivatives and leveraged tokens. High reward bets on their platform allow for threefold leverage purchases, tokens backed by Bitcoin intended to multiply one day's gains by 3. You could also purchase inverse tokens to wager on the decline of the coin's value. Similar to 3 times leveraged ETFs available on stock exchanges, FTX's leverage goes to an extreme by allowing customers to take on 10 times leverage. For some coins, only the most dedicated cryptocurrency traders will find 10 times leverage interesting. To develop FTX into a widely used exchange, the company must first attract a large number of average people. They've released a new paid service that allows customers to earn interest on their cryptocurrency and fiat currency deposits at a rate of 8% per annum. The plan was to use this capital to provide margin loans to the platform's other users. It was expected that there would be little to no risk involved because FTX would liquidate these margin loans prior to default. When they first introduced the service in 2021, however, the exceptionally high returns they promised raised serious red flags. The federal funds rate was very close to zero. If this were truly risk-free, they would have borrowed money from market funds at a rate of 2% or 3% with no problem. You see the growth of FTX over time to become the world's second largest crypto platform has given Sam a personal fortune of more than $15 billion. Because of the favorable regulatory environment, Sam relocated FTX's headquarters from Hong Kong to his compound in the Bahamas in September 2022. This is where his problems first arose. As a result of the minimal control, no one understood how FTX was generating an annual profit of 8%. Offering returns of 8% on both fiat and cryptocurrency deposits was a key factor in FTX's rapid expansion. Regardless, customers only want a big return on investment, and the platform received endorsements from celebrities like Tom Brady and Steph Curry in 2021 via a retroactive commercial in which Brady phones his friends and convinces them to join using FTX. People assumed Sam Bankman Fried was a genius because of his credentials, which included his time as a quantitative trader on Jane Street and graduation from MIT. Ironically, the question is, how brilliant can a CEO who plays a game during a business call really be? However, he has more than enough backing to win over the public. In fact, billions of dollars in donations came from the renowned Sequoia Capital. This is someone who has promised to leave the bulk of his assets to charity after his demise. Many people put their life savings into the app because they saw celebrity endorsements and thought the 8% income was practically risk-free. In the context of zero interest rates, an interest rate of 8% appeared very appealing. But if you're a baby boomer and you still don't get how FTX earns such crazy returns, you just don't understand the crypto magic. As of June 30th, Alameda has $14.6 billion of assets, according to private papers obtained by CoinDesk. Its largest investment was $3.66 billion worth of FTT tokens. Additionally, it possessed $2.16 billion in FTT collateral, making FTX-related assets 40% of its total. When used on the exchange, FTT tokens can be exchanged for discounted trading costs. Since Binance, the largest cryptocurrency exchange in the world, and an early stakeholder in FTX, is also a key holder of the FTT token. It stands to reason that demand for FTX will rise along with its value as its user base expands. Immediately following the publication of the CoinDesk article, Binance sold all of their FTT tokens, citing the new information that had become available. As a result, the price of FTT dropped to zero, resulting in significant losses for Alameda Research and ultimately leading to the collapse of the trading firm. FTX customers, many of whom put their whole life savings with the company, were unable to withdraw their money a few days later. Why would the failure of Alameda Research have any bearing on the FTX market? In light of the fact that the two businesses were not meant to have any ties to one another, the more fundamental concern may be how Alameda Research came to possess $14 billion in assets. Sam shockingly took billions of dollars worth of FTX customers' assets and diverted them to Alameda's research programs. With these funds in hand, they bought up a huge position in FTT token and other cryptocurrencies, which turned out to be a disastrous move. Ever since then, Sam Bankman Fried had been contradicting himself with different lies and stories. However, the FTX collapse kicked off investigations by the Justice Department, and the Securities and Exchange Commission focused on whether FTX improperly used customer funds to prop up Alameda Research, a crypto trading platform that Sam Bankman Fried had helped start. On December 12, 2022, Sam was arrested in the Bahamas for lying to investors and committing fraud. The day after, the SEC also filed civil fraud charges. Sam had been extradited to the U.S. from Bahamas since December 21, 2022. Unfortunately, Sam's partners, Gary Wang and the alleged ex-girlfriend Caroline Ellison, pleaded guilty and cooperated with law enforcement agencies. The fate of the ex-crypto billionaire is unknown, as he's currently facing the full wrath of the law. Thank you all for listening. For more finance stories, business, and updates on Sam's issue, kindly like my videos and subscribe to support the channel. Talk to you in the next one.